Well, as we just noted and told you in our newscast, investors in Canada are looking over a slew of Canadian earnings, including Sun Life Financial. Those shares getting pummeled on a fourth quarter earnings miss. Let's talk about that and some other results as well. Joining us from Winnipeg is Grant White. He's portfolio manager and investment advisor at IA Private Wealth. Grant, thanks a lot for joining us. Let's begin with Sun Life. This is becoming really the talking point of the day on the Canadian stock market. You don't often see the share price of a major Canadian financial institution get pummeled by more than 8%. The concern of investors, as far as I've seen, is performance in its U.S. business. How do you view these Sun Life numbers?
Yeah, I think that's fair because, I mean, we are seeing struggling performance there in the U.S. divisions, especially in their dental business, their dental insurance business there. And so, you're right. It's rare to see such a big movement in like what most would consider kind of a core holding in Canada. I mean, the company it's fine. It's okay. It's kind of one of those boring, it's going to slug along companies. But when we see, struggling like this, then it's I think a bit of a sign of the times of where investors are looking in terms of reporting, and if it's not almost perfect, then we're going to see some companies struggle over the next year, especially. And in Sun Life's case, it's one of those companies where, frankly, it's not something we own today. It's not something we're looking to buy. I mean, we have it as a hold. If you already own it, I'd say you're probably okay to hold it. But it's not something that we find is very exciting. Mostly from a growth perspective, we just don't see that they have that same growth opportunity. But at the same time, I mean, it's still a decent company despite the sell-off today.
Why would you not? So, your view on the stock is it may be 8% cheaper than it was yesterday, but you still don't think that you or investors should buy it. Why not?
Well, I just don't see that there's a huge growth opportunity with this company as well. We're looking for companies that have just better opportunities and better opportunities to increase their multiples. And when I look at Sun Life, and frankly, I think a lot of Canadians would feel the same way. I think there's a good opportunity for a company like Sun Life to kind of take the bull by the horns and do much better. But I just don't see that that's the path that they're going to accomplish in this space. And not that I see others are going to take it either. I just think that this is a space that we're not that interested in because we just don't see the growth multiples there.
Okay, let's move on to Canadian Tire. That stock is also down. Now, there has been long been, during this period of slowing economic growth, there's long been concern about how Canadian Tire could fare amid shaky consumer confidence and a pullback in consumer spending. Now, despite those concerns, the stock has risen fairly substantially from bottoming in April of last year. It's gone from about 130 or so to 150 today, but off in a big way today after missing expectations. What's your view of Canadian Tire?
Yeah, I think this is a bit overblown in terms of Canadian Tire. Again, this is a company that we're not actually buying right now, but I do think the management's done a really good job with this company. I just think that there's headwinds that are, that they're facing, and some of that is out of their control. I mean, you're looking at, tightening wallets. We're looking at tariff situations, you name it. And so I think that they're going to face those challenges over the next year at least. And so from that perspective, it is a challenging environment for a company. So they do need to be managed very well. I think they are doing a good job. I mean, what we'd love to see from them is an increased, increased sales, and especially those higher margin, products that they sell. And if they can do that effectively, then I think that, we would turn this from like a hold or, something, it'd become more interesting to us. Let's put it that way. But there's so many headwinds facing a company like Canadian Tire right now. With that said, I think, again, it's a company that you own today. I would still look to hold this company because I think the management's done a really good job, and I do think that there is future opportunities there. So I don't think that it's one that you sell off. But if you don't own it today, it's not, again, it's just because of those challenges, not something that we're looking to get into. Okay.
As I understand it, one stock that you would be a buyer of, and perhaps you do own on behalf of clients, is Waste Connections. That company has also come to market recently with results. WCN.
Yeah, so this is a company that there's a few things I like about it today. I mean, we actually don't own it today, but we are looking at it, and I love it because especially with all these considerations for volatility and all the things that are going on right now, a company like Waste Connections and what they do, I mean, it's essentially recession proof. I mean, we still need these types of services, and so I think they've done a really great job of managing this company. Pricing is pretty good right now. It's consistent. The entire industry is kind of beat up. I mean, they haven't seen the same gains in the overall in the industry that other industries have seen, and so I actually think that there's a good opportunity there that we're finding value. And if we can start to see some favor return to this industry as a whole, this is one of those companies that I think is just underpriced right now, and you might be able to clip off some nice returns over the next year or two. And again, you're not going to face the same headwinds that a Canadian Tire might be facing in tightening wallets.
That's Grant White. Stick with us because Grant will stick with us, and we'll continue to go through earnings